Yo, what's up YouTube? It's me again. In this video, it's really simple, really short. I'm just gonna talk about some correlation between the VIX and our US equities, primarily the S&P 500, and how I use the volatility index, the VIX, to determine when I want to go long for an extended period of time. So this is more of a macro play only. All right, so I have these levels on the VIX here of 46.9. And I've noticed that every time the VIX has kind of spiked into these levels, it's a good time to, go log and put some risk on the table, even though you might have to endure some short term drawdown, right? So when I show this here, I even have it color coded. Here's every single time the VIX has spiked into that aggressively. So we had the 2008 financial crisis. And even though you would have had to, if you invested on the first thing, okay, well, let me zoom in and get the proper things. So if you invested on that first spike, right, and it was in October, you would have had to endure a lot of drawdown, right? Like you would have endured a 25% drawdown, which would have been scary because I mean, this was the first time the VIX has been here for extended weeks, right? So here's that first spike. And then we kind of ranged in here for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks we were in here. So that's extremely long. That's how you know it was bad. So you would have endured 25% drawdown. But then if you look to the right, you would have made 143% gain if you didn't sell. So if you did 2x leverage, you wouldn't have gotten stopped out. You would have had to endure it. It would have been painful, but then you would have had a 143% gain. And this is for macro term, by the way. Macro means an extended period of time, roughly around 150 days plus, in my opinion. So you would have had to endure 161 days of drawdown. That's hell. But then after that, 2,000 something days later, you have 130 something, 180% gain. Like if we do 2130, I'll get my calculator, divided by 894. That's a 2.4x. So if you just put in a measly 5,000, within 2,000 days, your 5,000 would be 11,900, which is not bad. And that's if you sold here until the next fall spike. But if you just kept holding, it would have been much, much, much longer, right? So I color coded every time the VIXs came into here. So pretty much every single time I've seen the VIX spike into here aggressively, um, and I've noted them every single time. You get that drop, you might have to endure some drawdown at first, right? But then you just get big gains, like another, 52% gain. Then this one was small, but you got a like 15% gain if I zoom in, if I remember right. And by the way, 15% isn't bad. So, right? So if you got into this bottom, 16% gain, like you can't really complain about that. Then you have the COVID one here. Most people weren't buying, but smart money was. You could either go on that first week and endure like maybe 10%. If you invest here, you endure 12% drawdown. As someone in crypto, that's fine. And then you can get 100% gain just about. And then we had the most recent one here in August with the yen crisis. Wasn't looking good, but I mean, structure was maintained. I don't know why people were so fearful. And you just invest on that day that it happens. And if at the top, you would have been up 18%. Right now, you'd be up 15.5%. Like it's very good for equities. So that's pretty much all I have to say. It's just pretty much when the volatility index goes this high, as you can see here, at this level of 46.9 and spikes above aggressively, is when I believe you should go risk on your assets. And that's about it. So if you're wondering how you can find this info for yourself and track this in real time, go to this app here, TradingView. Literally just type in TradingView. Then go to the search bar, just type in VIX, choose the first one. You'll see the things yourself. 46.9, 47, whatever. Just put your horizontal line. You just go here, horizontal line, click it. Nice. And then when you notice the VIX go above, you can try to time the perfect entry, or you could just put in some money, be a risk on, and accept that a macro long is favorable and historically been proven to work accurately. So that's about all I have to say. I hope you guys enjoyed the video. Don't worry, I have more meme and crypto stuff coming out this week 100%. Even though it's Christmas, maybe I'll cook up a Christmas special video. But yeah, that's about it. So I hope you guys enjoyed the video. I hope it was helpful. And of course, you guys all know what the S&P is for also to track it. So, I mean, SPX, that's all you got to type in. And with that, yeah, here's the chart again. Pretty nice standard chart. I think it's pretty cool. I just track these two and I can figure out a macro play. So, yeah, thanks for watching.